In this short video, we're going to go through in class evaluation areas at Fibonacci support and resistance and prior divergences, and how we're going to use the market flow automated strategy to take advantage of those areas. So we're going to go ahead and go forward here with trades. And again, remember, we're doing evaluations only, longs or shorts. And again, it's not very difficult to know when one is coming. When we get to either a blue fib or a red fib, or we get to a prior
Order
divergence
pending.
area. And essentially what we're going to do is we're going to look for the market to make a move up to different Fibonacci levels and prior divergence highs and lows. And again, if we get the opportunity like this for an evaluation to go short, again, we'll leave the shorts on. And if it doesn't generate a short signal, we're not going to take a short signal. So again, if the market flow generates a short, we'll take a short. And if it doesn't, and you can see as we start to break through these evaluation areas, once we get more than a bar or two past the evaluation areas, we'll go ahead and put ourselves in a situation where we will tighten up our stops. So again, look, here's a breakthrough, and obviously we want to turn off our shorts here. So once we break through and we get a new signal to the upside, and again, this is the type of look right here on your 5-1 chart. If you were doing trend trades on a 5-1 chart, that would be your first trend trade to the long side. And then, again, as long as this market looks like this, this is the spot where, again, on a 5-1 chart, you'd be doing more trend trades, and you can see we've got a stranded seller here.
Order
so we can
filled.
bring our stops up quite a bit further. And again, as we start to, look, you get above 50 or 60 ticks. Again, we want to think about taking profits. Anytime we get one of these reversal signals,
Order filled.
you can see we can use the market flow as a potential exit spot for ourselves. So again, that trade, oops, let me turn on these here for you so you can see them over here. And again, whenever you get a market flow sell signal over here, you'll see we'll retest that area, and then many times they will take it to the downside. And so, again, evaluation signals, and then if the 14-2 chart, or, again, look, this is not only to be used with a 14-2 chart and a 13 range. This is just the example that I'm giving to you. So you can see over here on the larger chart, if we pull back into this area here, which, again, let me make that a little bit thinner so it's not quite so pronounced. If we get back into this area over here, obviously we're going to have the opportunity for an additional trend trade for ourselves on the big chart. So we'll either get an evaluation or we're going to get the opportunity for a trend trade. And much the same way you use the market flow on the 5-1 chart for a trend trade, you're also going to use the 14-2 chart for trend trades. So again, if you were watching this same scenario on a 5-1 chart, and again, if you go back and you study the 5-1 chart, you'll see there's a lot of opportunities, not only for trend trades, and the market flow will really help you out with those trend trades, but when you get back into a trend trade zone like we are now, back to the mid-band, again, we want to turn on the market flow. And when we do trend trades, one of the main things that we're going to watch out for is
order pending.
And you can see as we work our way up here, prior highs are going to be a good spot for us to kind of watch out for profit. And then, again, look, market flow wise, you can see we get another long signal here. So again, we want to get ourselves to at least break even on the position, and, break even, risking a couple ticks, and Again, if we can push up higher and we start getting to prior highs, with divergence, we always start reducing our risk here. So again, you can see we've, we've come down here again,
Order
and
filled.
now that we've made it up to prior highs, you can see we're going to,
Order
again,
filled.
reduce our risk. Another market flow paint bar, and notice we have divergence with stranded buyers and divergence at prior highs. Traditionally, that's going to end an uptrend. So, in accordance with the plan, we're going to wait for some type of evaluation area to work with. So again, one trend trade, which was great. I think pretty easy to see and pretty easy to show you that one there. And now it's a function of waiting and waiting for, again, a good opportunity. Usually when you have divergence on all of your charts, you're not going to do any more trend trades on the small chart. So we'll watch and see what we've got working here. And you can see, look, this is the market flow resistance with divergence, with the small triggers coming down. If there was resistance on your smaller chart there at 69.30, that would probably be your first trend trade to the long side.
Order pending.
And again,
Order
now we have
pending.
an evaluation, and traditionally, as the market's coming down pretty strong, if we break through these evaluation areas, especially after they retest and start to go back up again, if they don't go traditionally, that's going to be the end of those.
Order filled.
And then they'll usually, what you see here, usually they'll break out to the downside. So again, breaking to the downside is not uncommon. Especially after divergence on the highs, we've got to take a stab at it, but you don't have to risk too much beyond a divergence pivot stop out, because when the triggers are really strong, we end up with, the potential for it to keep going. And now you can see, look, we're against the trend here.
Order pending.
And, look, anytime you're against the trend, anytime you're with the trend, you want to make more money. And anytime you're against the trend with pivot stop outs, you have to be a little bit more cautious, because, even though we have an evaluation here, there's a really good chance that we end up with trend trades to the downside. So if we make it back up to resistance without getting stopped out here, then you can see our automated stop came up here and got us a pivot. So again, look, if we have no divergence on the lows and we get back up to 68.97, 98 area, give or take, we're going to be looking for
filled.
the market flow to generate potential short trades for us.
Order pending.
And you can see, obviously, we've got a stranded buyer and a short trade here. And our next Fibonacci support is going to end up down here at 68. Somewhere between 40 and 38, that's kind of what we're looking for. So, we'll give up a couple of ticks to kind of put us in the right direction here. And again, we don't want to keep our shorts on. I left the system enabled so we don't have to turn it on and turn it off every time. And again, as we work through market flow here, we can see where, I guess I got to be careful with what I'm clicking. And you can see, obviously, we came off of the 97 area, and again, there's our white paint bar stop. There's our locking in 5 tick stop, and you can see, obviously, our stop has been put behind the market flow high volume area. Again, so we shouldn't take out this high volume area to the downside. And what we're looking for is what? We're looking for Fibonacci support. One of the things that you'll notice we've got an evaluation from the prior divergence line. We're only going to get one. So we're not going to get an evaluation every time we hit the same divergence line over and over.
Order filled.
Usually if it holds, then obviously that'll get you a bounce to the upside. With the trend, obviously we're going to make it down to, you can see 36 is our fib here, so obviously we made it down to our fib. And, again, then we talk about overnight trading, because we're, again, when we get to 1 o'clock, 2 o'clock, usually our morning session is done, so that's about all that we'd have for our morning session. Again, if we want to continue trading, obviously we're going to wait for another signal. We're going to wait for our trigger lines to cross. And, again, let me show you this because, there's two things that'll happen when we get really strong triggers and a real strong trend. And you'll see this a lot. When the market flow comes out to here, so you see that pink line coming across there, and you have really strong triggers down, and we go through this a lot in the lessons where you're going to get one more trend trade short from the mid band, usually one on the wrong side. When we talk about that a lot in our trigger line lesson. And again, this market flow, for the more assertive traders, they would be going short at, 68.75, somewhere in that neighborhood. And again, if it gives a signal in that 68.75 and you can see a white paint bar up into it, usually that's a
Order
really
pending.
good precursor
Order
into
pending.
us having the opportunity for one more trend trade. Usually it'll come back down to support, and then the second time down to support, we'll get the opportunity for some type of counter trend trade on the retest. And that's really what we're looking for, is we're looking for that retest to help us out here for what we're doing. Now, with that being said, again, we need to, and again, you can have, as you start to get back into some trouble spots here, one of the opportunities that you'll also have with our market flow software is you can use the trail. See how we get to the top of our triggers over here? Usually during this retest, this is where the market will start to bounce up for us. So again, that was one last trend trade. Didn't quite make it down to the fibs here yet, but because we have divergence on our charts and retesting the triggers, and it's the end of the day, we're going to end up not doing any more trades. Now, everybody in our class wants us to obviously take the next long trade. You can see we've got pivot stop out at fibs on both of our charts, and this is a very typical scenario where we get a really good trend trade, the triggers are pushing really strong, then we pull back up and we get one more trend trade to retest, and then once we retest and have a pivot stop out at the bottom, traditionally that's where we really make a bottom, and then the market will run back up to Fibonacci resistance up here. And again, when we get, and if we get up to Fibonacci resistance, that's the point at which we will really start to either reduce risk or take profit. And, I'm a big fan of taking profit into Fibonacci resistance if possible. So again, we're going to have some areas that we have to work through here. So again, let me leave this signals off. And again, this is why we have the option in our software to automatically disable the strategy after every trade, which is the most advisable way to do it. And the reason why it's advisable is because you'll forget and you'll be too busy watching your trade, and you're going to end up in some positions that you don't actually want to be in. And usually that's not a good thing. So again, we had an eval down here at the bottom. And again, it's a really good structural pivot stop out at the bottom. Whenever we make a bottom, that's really what we like to see. We like to see that last trend trade. We like to see the triggers rolling up here. And, again, look, once we get the triggers to roll up, if we were on a smaller chart, again, here, just let me kind of squeeze this together for you so you can kind of see. This is very much in line with what we teach in class. Pivot, stop out, retest with an evaluation, and the market goes up. These are the looks where you would be taking 5-1 trend trades with the market flow if you weren't already in positions. Again, a trend trade to the long side here with, again, this is the same look for trend trade longs. And then, look, double top with divergence. It happens all the time and it will reverse the trend. And, and again, in this situation, we tried the long here and we took a little loser. It's going to happen. We had another pivot stop out here, which got us up to our trend trade short. And then that took us down to Fibonacci support. And because of the strength down, we usually get one more bounce back down to the downside. And, then again, kind of the same process one more time. Pivot stop out, small triggers roll up, so you'd be looking for long trades. So this is extremely consistent with what we do in our classroom. And, again, when we get an eval, look, we got to turn on our shorts here. So if we get a short signal, well, with the market flow, we'll take a short. If there's no short signal, we won't take a short, and we'll be able to take, the market back up to the upside. And again, as you start to use the software and you start to get used to fibs and one-to-ones and triggers, and there's a lot of opportunities that you'll be able to do. And again, if we break through the evaluation areas, again, we don't want to be in there. So again, watch, we can use the trail
Order filled.
next reversal bar marker, and again, I guess that doesn't matter. So you can see we obviously took that trade up, and again, if we would have left this on and trail behind the last bar, sometimes in these runaway markets you get some really great opportunities. Typically, one-to-ones that are right beyond your fibs will cause a bounce, and then we'll come back down into support, and then we'll have the opportunity for more trades. So again, just, again, recapping, our 14-2 chart really leads the way for us, and you can see they're really running there. So we get 14-2 support, long, 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 one more long, double top with divergence, a little loser, one long against the trend, so we're very, very cautious about that. One trend trade short with the trend, one more to retest, and divergence on the lows with the triggers rolling up, long trade. Now we're looking for more longs, and we need to pull back to fibs and mid bands. And again, if you were on a smaller chart than just a 13 range and we'd definitely be looking for long trades. Now, because we're doing this exercise on a larger chart situation, I want you to keep a couple things in mind. Number one, this is just a big chart view. And, again, look, when we look at our trading plan, and again, when you guys go to the education page and you go to the trading plan, one of the older videos that we've done down here is market flow reading lesson. And this video
Welcome, traders.
is from literally, it's from March 2017. And today is 10/4/2018. So that video literally is a year and a half old, and the entire video is predicated on running
Short trade.
and showing you what happens on the 14-2 chart and some of the market flow opportunities on a 13 range chart. And again, that's kind of the premise for what we're doing here today. we're taking the evaluation areas and we're using them as opportunities. And again, the evaluation areas are fibs and or prior divergences. And again, I want you to keep in mind when you get to a prior high or a prior low that has divergence, those double tops and double bottoms really have an opportunity to reverse the market and make some bigger retracements. So again, if you were on a smaller chart, such as the 5-1 chart, there's a very good chance you had some type of a long trade in here. And as you reach the prior highs, I'll just draw a box in here. When you reach prior highs, if you can't get through them, it often leads to a much larger retracement. So there's a couple of things going on. Number one, you can see our triggers have gotten below the large triggers. And again, it's not that you can't take longs here, but in this plan today, what we're going to be doing is just the evaluation trades. So again, if we get an evaluation, we're going to turn on the strategy. So if we get one down here, we'll put on a long trade, which probably is going to be preferable. If we get one up here with a double top, with divergence, and we get a signal, then we'll turn on the shorts and see if we can get an opportunity for maybe some type of deeper retracement. So you can see we've got an eval that has popped up here. And essentially what we're looking for is a market flow, sell signal here. And again, we didn't quite stop out the highs up there. Usually they go stop out the highs, but well, there you go. Now you can see they stopped out the highs. So anyway, that's very typical. I mean, that's kind of a second signal right there. And again, as we start to work our way to the downside, with the white paint bars, and multiple bars with a lot of volume down, we want to make sure that we are, again,
order pending.
I'll put the reversal on for us here because we now have obviously a market flow long signal. And again, look, valuation, stranded buyers and sellers, a lot of times they'll retest something like this and then they'll take it back to the upside, where they kind of stop out the pivot and then they take off. And you can see over here the same thing. We got a high and then they stop out the pivot and then we went down. And then we got the low and then they stopped out the pivot. And again, a very, very strong market flow bar for us. Now, you can see we've got high volume area right there with resistance. That's a real good spot to watch out for, a first profit target. It's not as much as we've been going for.
Order filled.
But again, profit targets at resistance with the high volume area. If this was fibs on a much smaller chart, we would use this type of area if there was a bunch of fibs here for a sell signal. The bottom of the trigger is a market flow sell signal. And really what we'll do is we'll use it more as a trailing stop. So if we get a down bar here, we won't make a lot of money, but we won't lose any money either. And again, if we keep going, great. We'll get up to the next fib, which will be nice, but you can see this again, and this is stuff we talk about in class a lot. That's the trouble spot we need to get through. And again, if we can't get through this trouble spot, it'll have a tendency to kind of reverse the market. Same thing we saw down here at the bottom. So again, you can see this is a good opportunity for us to trail our stop one more time here behind a very high volume bar to the upside. And I heard some evaluations there. So anyway, we'll trail our stops up and we will turn on shorts here to see if we can get shorts to the short side. And again, you can see this is the bar basically right here. If we break through here, and you can see we've got 3 triggers going through, that's pretty much the end of our short trades thought right there. And again, we're trying to make it to resistance, but because we are so close, obviously, we're going
Order
to
filled.
definitely, and you can see even a market flow sell signal. So again, that works out to be a good exit for us. And, again, now we can, when you go back and you look at your 14-2 chart, I think this is really how you should gauge your trades, because all of our trades are predicated on the larger chart. And again, when you squeeze this together and you look at the larger chart, can you defend with pivot stop outs and evaluations on your chart, strong triggers on your chart, pullbacks to fibs with the trend up on your chart? Again, here's a loss. A little pivot stop out, but against the trend. And, again, look, this is where we make it down to support, a second attempt at it. And then from above the triggers, we make a reversal. And again, we got one more trend trade to the upside. And again, I guess we made it to our fib, but that's okay, right? And now we will wait for more trades. And, again, we're looking for evaluations, we're looking for divergences, we're looking for fibs that will cause us to have some additional great trading opportunities here. And again, if you get closer to fibs, I mean, obviously we could have left that on and at least made it to the fib, but, within a couple ticks of a target, you can never get mad at a $380 trade there. Now, the one thing that, again, I want to caution you on is if you have a really, really, really strong trending market and you've broken through multiple fib supports and you've broken through or multiple fib resistances and multiple divergences, you don't really want to go against the trend too much. So, again, you have to have some type of perspective on what the actual trend itself is. And, the other thing that we want you to do is we want you to go in and to be able to not only take these trades, but look at these types of trades where you have the evaluations and the divergences, and you can look at them on your smaller charts. And those will also, with a smaller, this is a bigger version, obviously, of this theory. But the 5-1 chart with the 5 range market flow will also help you very much with timing your entries as well. Also, if you want to kind of go middle of the ground, 8 range chart with an 8-2 mark, Nexgen dynamic Renko bar. For some of you guys, you even might even take a 21 range and do a much, much larger chart and do a little more swing trading with it. Again, for day trading, I think this is about as big as you need to go, a 13 range market flow. Obviously, during the day, we use the looks and the opportunities on a 5-1 and a 5 range market flow. So again, I think, again, for the lesson, I think that's obviously a good example of what we're looking for. Really, the enhancements to the market flow system, those are key for us. So again, let's kind of go through those one more time here. And again, let's take a look at what we did just in that, in that last little session. Again, I'm going to put a little disclaimer on you because it's only fair. We're doing market replay. And anytime you do market replay, please take a moment to read that. And those trades, here's what we ended up with. We ended up with $5,600 on a 2-lot in 2 days. Very, very solid 3.5 to 1 performance. And, the other thing too is that the average losing trade is only about $100. The average winning trade, a little over $300. And when you get the right spots under the right conditions, obviously, a lot of our traders trade for 10 ticks and then they get out. It's not always maximizing what our software says. So depending on where your fib areas are and how much momentum there are, sometimes it's more advantageous for 20, 30, or 40 ticks in a trade. So anyway, just to review the things that we were doing. We were taking, and this is a different picture from a different time, but we were taking, this is on the first, we were taking evaluation areas and then using market flow signals like an antenna bar to go short. When we get an evaluation signal at a Fibonacci support area, you can see we had an antenna bar and a long trade. Then we had an evaluation area at a prior divergence with a volume reversal from the market flow signal, which would have generated a short trade. And then, this is the evaluation area from the 14-2 chart. So again, when we see things like evaluation areas on our 14-2 chart with the trend, we can use the market flow and the antenna bars and then get ourselves into some trades. And again, I want you to also keep in mind when the trend is strong, sometimes you'll get to these evaluation areas, which are prior divergences and fibs, and we don't get a signal and the market keeps going. So just because you get there, sometimes it's a good place to take some profit, but it's not always a perfect place for reversal. So the warning is super, super strong trends, super, super strong triggers. You're not always trying to go against the trend too much. We like to trade with the trend as much as possible from the edges. That's why this long trade is much better than thinking about a short trade. And you can see at both of those evaluation areas, there was no market flow signal. Now, one more thing to kind of go through with you guys with the market flow. Again, some of the changes that we've made, this is still the same. You've got all of your signals automated for you, the white paint bar entries, yellow paint bars, the volume reversal arrows, and the antenna bars. We have still dynamic entries. And then, in this situation, I allowed reversals to be true. So if we were long into a resistance area and it gave a sell signal, it would reverse the position. The other thing that is notable, input number 20 on the antenna bars. We actually use a different logic with the antenna bars. So if you look down here at the bottom, this antenna bar, there's not much retracement. And many, many, many times with an antenna bar, there's no retracement. So the strategy itself will actually put the order above or below the high of the bar itself. So instead of having, a retracement like we're trying to get on some of the other trades back to the high volume area, the antenna bars are basically just go. And then you've got the ability to set your number of contracts that you're trading on target 1 and 2, how many ticks are you going for. You're able to adjust your stop. And again, we're using a 21 tick stop, which is big, but the bigger the chart, the bigger the target, and the bigger the stop is necessary. When we use a 5 range chart with our market flow, 10 ticks is our max stop, $100. And obviously then when it trails, which is the other portion of what we've added in for you. Our software now will automatically trail stops for you. So when you have a 5-1 reversal bar or an 8-2 reversal bar or a 14-2 reversal bar, basically what you want to do is you want to take the dynamic Renko bar size, multiply it times 2, and add 1 to it. So for example, a 5-1 reversal bar would be 11 ticks. So, again, if you're using this input on a 5-1 chart, Renko bar and a 5 range, you want to have that as 11. It should be 29 for a 14-2 chart, not 27. And then the other thing that you'll see in all of our trend trade videos is trailing the stop behind a white paint bar and minimizing your risk. That now too is automated for you in the strategy. So if you're in a long trade and you get a white paint bar up with green dots, it'll trail the stop for you and minimize your risk for you even further. And then finally, one of the trades that we have in our trading plan, and again, this is one that's used a lot more on a 5 range chart in a really, really strong market, but one of the rules that we use is we like to have the deeper retracement to our fibs. Sometimes the market's in a runaway situation. And if we end up in a runaway situation, we want to take the market flow reversal longs with the arrows because sometimes that's the only way to get in. We call it kind of a bonus trade, if you will. But it's a really, really consistent trade with the trend when the trigger line configuration is correct. And again, that's in your strategy. That's what this yellow button will do. So if you find yourself in a very, very strong market condition and you push this button, it's only going to take the trades that have the arrow with them in the direction of the triggers. It won't do the other trades unless you actually turn on the long or short buttons on. So again, if you push this one because the market's really, really strong, it's going to do these arrows for you when the trigger line configuration is correct. The last kind of final thing that we'll go through, these are the trigger line settings for that trade. So depending on, what chart you're running, whether it's a 5 range, and you're watching 14-2 triggers. So again, you're going to have to set this depending on the size chart that you're using. Whether it's a 13 range and a, 24-6 trigger like we were just using on this chart. That's what this one is. Or whether you were using, a 5 range with a 5-1 chart. And again, when the trend breaks fib after fib after fib, you don't want to do counter trend trades. So, as long as it's in a reasonable swinging back and forth type motion, this is where your evaluations and your fibs and your pivot stop outs are going to work the best for you. So thank you for your time. I really look forward to seeing everybody in class. Again, there's 2 things. Number 1, if you have yet to sign up for a demo, please feel free to sign up for a demo. If you needed to get another demo so you can get some software going, let us know. Also on the educational page, we have our entire trading plan here. Please review the trading plan. And, again, inside the trading plan, this is our meat and potatoes right here. Really high probability trend trades. And, this evaluation trade at the edges is a really, really good opportunity for somebody who's newer to, have a very structured way of actually doing trades against the trend. So again, when you get an evaluation and you turn on your market flow, you can get these trades from the top, you can get these trades from the bottom, and conceivably a choppy market becomes a very, very profitable trading environment for you instead of, waiting for the breakout and waiting for, the market to start trending again. When you can take advantage of 2 or 3 of these, usually you get about 3 to 4 trades inside of a choppy zone before it breaks out. And then we revert back to, strong trend trades on our smaller charts. Usually that's a really, really good recipe to be able to take advantage of both sides of the market. So again, stay within this section of the plan first. If we get into a choppy market, you can take advantage of this evaluations at areas and the market flow for entry. I look forward to seeing everybody in the room, and I thank everybody for their time, and I look forward to helping you guys make a bunch of money. Talk to you soon, and we'll see you in class tomorrow.